right, pulse of the day. We're here, right here, Market Pulse on News Central, and of course, we're focusing a bit on, the currency markets as well as equities. Nigeria's exchange rate has struggled throughout the year. If you're looking at it year to date, the Naira has depreciated by about 70%. It started at about 900, to the dollar in January, and now it is way down to 1,500. I think earlier on it was 1.6, 1.7, but we're at that 1.5 level right now in October. So yesterday the Naira appreciated against the US dollar, closing at 1,561 Naira 76 kobo in the official investor and exporter window, INE window, as global oil prices, of course, remain steady above $77 per barrel. Of course, this appreciation marked a shift in Nigeria's foreign exchange markets, reflecting a 4.49% rise from Monday's rate of 1,635 Naira or so. So let's get into the conversation and track the trends on the Naira. Joining us, of course, is Dr. Patrick Ejumedia for the conversation. It's great to have you in.
Thank you. Good afternoon.
Good afternoon. There's a lot happening in the currency markets, and of course, it'd be great to get your parts, your thoughts on it, your sentiments on it. The uptick in the Naira's value, of course, coincides with a surge in market turnover, which has doubled to reach $253.68 million compared to what happened the day before. So, can we draw some sort of connection here? And what would you say accounts for the rally on the Naira of late?
Okay, first, we need to first understand that usually at a time like this, when we get into the fourth quarter, we see this kind of volatility in the exchange rate. And of course, we know that the exchange rate is not a stable variable, it's a volatile variable. So we see that happening. Now, but like I've mentioned, yesterday we saw the appreciation of the exchange rate against the dollar. And we cannot actually say it is because of that. That's why we had the stock turnover increase, because there's always a lag effect when we are discussing economic variable. When the exchange rate appreciates, there's a lag effect that maybe after a day or the second day or the third day, people begin to see that the exchange rate is appreciating, and that they now begin to take position in terms of whatever they are doing. But basically, there's this positive relationship between the exchange rate appreciation and the turnover, the market turnover. And the reason is because when there is exchange rate appreciation, what happened is that there was increased investors' confidence, and increased investors' confidence will increase activities in the market, and that will also increase the market turnover. Again, if there's exchange rate appreciation, what that would do again is to attract foreign investors, because the real return on their investment, when they will be repatriating their profit, will appreciate to go up. So that positive relationship exists between those variables. But like I said earlier, there's a time lag effect. It doesn't just happen. There's an exchange rate appreciation today. The next day, people begin to react. Sometimes 1 week, sometimes 2 days, sometimes depends on how much lag it takes for investors to react to the appreciation of the exchange rate.
All right, Dr. Patrick, we're seeing that the recent rally on the Naira appears to be one-sided, and it's only tilting towards the official rate, but not so much on the parallel market. And this is causing some FX spread to spike, making it spike strongly. What are your concerns about this?
Now, for a long time, since the current administration of the Cardoso government came into it as the CBN president, basically what they've been trying to do is to ensure that they take away the large gap between the official and the parallel market rate. And yes, it's difficult because the government has been trying to do that, even though we've seen that if you check the trend of both markets, the official and the exchange rate, you see that they've been very close for a long time, except sometimes in September, where we saw large depreciation, large gap, large official and parallel market gap between both indicators. But as at October, we've not seen those large gap, except for yesterday, when we saw that the exchange rate in the black market did not depreciate, remained at around 1,675, and that of the official market appreciated. So that took a gap of around 84 Naira compared to around 41 Naira gap that's between both market and both exchange rates, both rates, started October with. So, but basically, the CBN, as led by the current administration, would not want to see that gap get wider, because as long as the gap gets wider, it will give speculative activities to people who want to use the exchange rate to speculate, and I don't think they will want that to happen. So, and that's why you see that current constant intervention by the CBN in the market.
Yeah, I mean, hopefully we see the CBN come through. Once again, we don't want speculators to take over, and obviously the idea was to unify somewhat the exchange rates. But we're also tracking some sort of improvements in forex inflow. Portfolio investment has risen by 360% to 3.5 billion in the first half of this year. So how do you measure the level of impact that this has had on Naira's ability to appreciate against the dollar, especially considering the trade-off here, right, with high interest rates to attract that investment? So how would you measure the impact?
Now, yes, truly, like you said, portfolio investment has increased. But again, portfolio investment has three components. It has the federal government bonds, it has the money market instrument, and it has equity. Now, among the three of them, the equity component of the portfolio investment, which is FPI, is what actually went up this quarter, as the data was released yesterday by the Nigerian Bureau of Statistics. And if you check what has, in my view, has probably caused that appreciation or that increase in equity markets in the Nigerian economy, is probably because of the depreciation of the Naira within that period. If you check, the exchange rate actually closed at the end of first quarter, exchange rate was around 130 Naira to $1, compared to what is closed the second quarter with, which is around 1,400 and something Naira to $1. That's about 11% depreciation. So that depreciation, what that does is that it makes the Naira, the equity, Nigerian equity, to be relatively cheaper for people to buy, and that's probably what attracted that flow, and that's why that component actually showed that huge increase in the second quarter data that was released by the NBS.
All right. Speaking of inflows, the foreign investment in the Nigerian equities market stood at $150 million in just the second quarter of 2024. And that's a whopping 204% increase from what we recorded in Q1, in the first quarter. What have been driving this growth, and what are the incentives for foreign investors so far? Do you see that the momentum being sustained in the subsequent quarters, considering the trend of the market of late?
So, like I said earlier, among the component of foreign investment, foreign portfolio investment, because there are three components that makes up the total capital importation for Nigeria. There is the FDI, there's FPI, and there are other investments. So among the components of the FPI, we have three main components, which I mentioned earlier. Now, but fortunately, we saw equity flow increasing by that amount I have said. But if you check the data, it is still the least inflow that we experienced in that quarter, because you will see that for portfolio investment, for for the money market instrument, there are over 1,076 million inflow that we got, even though it declined. If you check the same thing for the bond, is about $178 million inflow that we got, even though it's also declined quarter on quarter. But equity inflow increased by, like you said, by 204% up to about 150 million. So it's still the least. Yes, it has gone up. And like I said earlier, one of the factors that is possibly driving it is because of the depreciation of the exchange rate. That depreciation, what it does is that it makes the equity, Nigerian equity, to be cheaper. And people with less dollar, you can buy large amount of equity. So that attracted inflow to the equity market.
I mean,
so the equity.
We'll have to wait and see whether this trend continues, for the second half of the year. But thank you so much for joining us and sharing insights, Dr. Patrick Ejumedia, Head of Research at Sterling Asset Management and Trustees Limited. It's been a pleasure.
Thank you.
All right.